Hello everyone, and welcome to the wonderful Smock Alley, grandest of the rooms in Smock Alley, for this forum today, which is entitled Minding Your Money. This is run as part of the Seen and Heard Festival, and also facilitated by the Arts Council and most especially Smock Alley and Fight2Flight Theatre Company. We've had quite a few of these forums, just investigating all kinds of issues that come with working as a creative in the entertainment business. Today is the huge and some might say unscalable, but we shall do it, issue of minding your money. So with me today, I have Peter Daly, who's an actor and, as it happens, a trained accountant as well. So he knows both sides of the dark arts as a result. And we're also welcoming Gerry O'Brien, actor and at present president of Irish Equity. So I will ask our guests to just tell us a bit about themselves, first of all. I guess how they started out, which is with nothing, and we all still have most of that, I believe. But how they start out and how they're managing. And from there, we'll go inwards and ask some questions and tease out some problems. And then, of course, look to the future as well, with great hope in our hearts, I hope. So, I suppose just because he took my seat, I'll start with Peter Daly here. And Peter, explain yourself, basically.
Thank you, Pauline. I did take Pauline's seat. Pauline went to sit down here and I went, no. That's just too exposing in the middle there, so I made Pauline sit over there. So, my name is Peter Daly, and I qualified as a chartered accountant in 1999, and much to the great disappointment of my parents, I then said I was going to become an actor. And at that time, I trained with one of the big firms, and I was on path to get a decent job and probably not have to worry about money for that much for the rest of my life. And when I decided to become an actor, I thought there might come a stage when I will be an actor and nothing else. And that has never, ever happened. I still do accountancy. I do more accountancy than I do acting. And in the last few years, actually, COVID notwithstanding, I've done a lot more accountancy than I have done acting. It's a tough old road, as we all know, but the rewards are great, just not necessarily financial. As an accountant, so I worked for other people part-time when I became an actor first. So 1999 right through to around 2015, I took whatever was going. I kind of worked with a few audit clients and did like 20 hours a week, 10 hours a week, and usually hourly paid work, and it was great, it was very flexible. But there comes a stage in your life when you realize that that's not going to last forever, and it always felt a bit too good to be true, where I'd be, doing a lot of work for somebody, and then I'd get a decent part in something, and I would say to them, I'm gone, and I'm gone for the next 4 months or whatever. And, the brow would become furrowed and so forth. So around 2015, I set up on my own. I set up what I would describe as a boutique accountancy firm. I put the word out to friends and family that I was setting up on my own, and I would be looking after small and medium-sized enterprises. So since then, I've kind of grown the business. I would describe my client base as kind of a little under the 50% would be people working in the arts, a lot of actors, writers, directors, producers, and then lots of other people, small businesses of all shapes and sizes. And so I kind of get to see this whole area from both angles, both as an actor who flips between a PAYE job where everything's looked after for you and the only deduction you get is your agent commission, through to self-employed acting work where you might get an ad which isn't taxed but you need to stick it in a tax return somewhere, then to the main sideline of being an accountant and declaring that and so forth. But then I get to see it from my clients' point of view, some of whom have done fabulously well and who've gone on to international stardom from small beginnings, and others who have an amazing year followed by a shitty year, followed by an even shittier year, followed by an amazing year again. So, and it's about kind of, from my perspective, looking at that and trying to navigate them through that as best as I can. I think I don't think anybody gets into the business of being an actor to become rich and famous. Maybe they do, but I haven't yet to meet them. They get it because they're an artist and they set out to make art and to entertain people and to do something that's not that usual with their life. And then sometimes they end up making money, but oftentimes they don't. And I suppose it's about best navigating that through as best as you can. I think when we get into the kind of question and answer session, I think one of the things I'd like to get across is maybe 5 tips and tools I would kind of say to people about just to keep an eye out for. Particularly maybe people starting out in this business who kind of have never done a tax return before, or people who've been doing it for a long time and there's something in the back of their mind where they're kind of going, I've never fully dealt with that and I'm not really sure, is it an issue or not? And one of the first things I'll say is if there isn't much money involved, it isn't an issue. Revenue is exactly like any other business. They're not that interested in chasing someone for €500. It's too small for them to worry about. They're interested in chasing someone for €10,000 plus interest plus penalties. If they chase somebody for €500, it'll cost them €10,000 to do that, and they're better off spending it chasing one of their large cases division. So what I always say to kind of, if I'm in doing a class with the students in the Lear or whatever, I say to them, look, sometimes the tax man can kind of sit on your shoulder. He's like a boogeyman, and he's kind of going, I haven't done this fully right. If the amounts we're talking about are not large, I wouldn't give it a huge amount of thought. There's a magic number. I'm getting into answering my own questions now. Great, okay.
That was one of the questions I was going to ask.
Yeah.
Anyway, so.
When do you start worrying? So people might not be aware of this. You might get I'm going to pick a really, an unlikely example. Someone is mostly PAYE and they've never done a tax return before and they've never registered as self-employed, and I'll tell you when you have to register as self-employed, but they've never done that, and all of a sudden they get a gig and it's a reading, a week of readings, and they've got €500 and it's not taxed, and they go, what am I supposed to do with that? So because it's below €5,000, they don't have to register as self-employed and tell revenue. That magic number is €5,000 in a tax year after expenses. That's what makes you a chargeable person. And a chargeable person has an obligation to register as self-employed with revenue. If you have been in the past a chargeable person and you drop below that 5,000, you can deregister for that year and then re-register again. So the answer I always give to somebody who kind of goes, I think I've done a few things wrong and I'm a bit worried and I'm afraid it's going to catch up me. I say, if you had to quantify it in a tax year, is that number you're talking about, the thing you didn't declare, is it below or above 5,000 after legitimate expenses? And if it's below 5,000 or a good bit below, then I would say, while you should tell revenue about it in a really simple income tax return that you can do on the My Account. My Account is one of the 2 filing platforms that revenue have, My Account or Ross. My Account is when you're not registered as self-employed. You can stick it in there, but even if you don't, nothing bad is going to happen. The worst that might happen is revenue might send you a letter saying, do a tax return. You do it, you might owe them £1,000, and that's the end of the story. So the first thing I would say is it's a materiality game. If you're not talking about a huge amount of money, it's probably not an issue. Now, you might have a situation where somebody comes to me and says, I'm worried about something, and I've been worried about it for a while, and it hasn't just happened in 1 year, it's happened for the last 10 years, and I haven't said anything to revenue. So then it becomes a kind of an exponential problem, and that's the second thing I always say, don't let it build up. Just go, right, I haven't done anything and it's been 3 years now. You can bring yourself into the tax net at any point. It's called an unprompted voluntary disclosure. So in other words, that's where you're unprompted by revenue, you know you should say something to them, and now you're telling them before they come chasing you. If you do that, the interest and penalties are practically non-existent. That's different from a prompted voluntary disclosure, where you are prompted by revenue to go and talk to them, and I'll tell you when that might happen. Then interest and penalties start to kick in. So you kind of just want to be one step ahead of it. If anybody here is listening to this at home online and know that they need to do something, just go and talk to an accountant. It's usually not as bad as you think. And particularly if you're not talking about a lot of money, it's never going to be too bad. So unprompted voluntary disclosure. Yeah, don't let it build up, basically. Know about that magic number of 5,000 after expenses in a calendar year. And if it's below that, don't get too caught up in it. Don't let it build up. The other pitfalls I see, one of the things when myself and Lucy were emailing and had a phone conversation, is PRSI contributions. So PRSI contributions are really important for a number of different things. The different benefits you get, like illness benefit, disability benefit, job seekers benefit, usually if it's got benefit at the end of the name, you're getting the benefit from the PRSI contributions you made in the past, unlike allowance, which is usually means tested. So the PRSI contributions are really important for the various benefits you get, and that, to be honest, is not my main area of concern when it comes to PRSI, because it's a very specialized thing, and I would say if anybody's in a situation where they're trying to figure out the benefits because of something that's happened, they've lost their job or they can't find work, I would just go on to Citizen Advice website. It's really, really good. But the main thing I keep an eye out for my clients when I'm doing their tax returns is the PRSI contributions they've made for the purposes of their contributory state pension. So there are two state pensions in this country, contributory and non-contributory. The contributory one is where you've contributed into the system, you've made PRSI contributions. It's incredibly overcomplicated. And the reason it's overcomplicated, the system itself, is because it started as one thing a million years ago, and then they tacked on and they tacked on and they tacked on different things on top of it. But as a self-employed / PAYE / unemployed actor or artist, mooching from one year to the next, where you might have a fantastic year one year and nothing the following year. What happens is that each year you have the potential to either pay or get credited up to a maximum of 52 PRSI contributions. 52 weeks, 52 PRSI contributions. When you get to this age where you are getting the contributory state pension, at the moment it's 66, it nearly went to 67 and 68, and then political outcry brought it back to 66. It's still a political hot topic, but when you get to 66, you fill in a form and you tell them your name, your address, your PPS number, and here's where I've worked. And for most people, that's one job or two jobs, and it's easy. And for us, it's not. So you're keeping a list of all the jobs you've done and all the times you've been self-employed and so forth. But you just pull it together as best as you can. Having me brought it up now, just keep it somewhere so that you're not trying to find it all by the time you get to 66. Or 3 months before 66 is when they ask you to go and do it. What they then do is they cross-reference that to what PRSI contributions are showing up on your record. And in the most case, it'll be really straightforward. Even if you don't have the record, they'll have the record. The reason they ask for this detail is that back when records weren't all computerized 30 years ago, 20 years ago, they might need a little bit of help in joining up the dots. What they then do is they check to see how many contributions you had each year for your entire working life, and they work out an average. And that average can't be higher than 52. That's the maximum, but it could be anywhere lower than 52. If it's lower than 10, I think you don't get the contributory state pension. There's also another 3 or 4 different hoops you have to join. You have to have started paying before the age of 55. You have to have a maximum of, I think it might be 520 paid contributions. So over your working life, you have to have paid at least 10 years, and that could be like a combination of 10 weeks, 1 year, 52 the next 12. So having done all that, they check to see what's your average. And you can use a certain amount of credited contributions, which is where you get contributions from signing on, but only a certain amount of them. Again, all very complicated, and they're not even in here yet. Having done that, they work out your average. If you have between 48 and 52, you're in great shape, you get the full state pension. It's around, about $245 a week, something like that. If you have below 48, you don't get the full pension, but if you've got between 40 and 48, you get almost the full pension. So you're not doing too bad. 40 out of 52. Then it gets lower and lower and lower until if you drop below 10, you don't get anything. Again, this is all really well laid out on the Citizens Advice website. I find Citizens Advice website very hard to say. So yeah, it's all there, and kind of go and check it out. So you might kind of have this rising panic feeling of going, I have no idea what my contributions are at the moment. That's a really easy thing to find out. With a My Welfare login, I talked about My Account, which is revenue. My Welfare is Social Welfare, Department of Social Protection. You can log into both of them from their own website, but you can also get to both of them from MyGov. So MyGov leads you to both My Account and My Welfare. My Welfare, there's a little red button somewhere in one of the menus that says Statements and Records, something like that, Statements and Records. It's a red button. Click into that, and the very top option are Record of My Contributions. And you can apply for that. If you've got a verified account, it'll give it to you straight away. And you can look at it. It'll tell you the date you entered the workforce, and then every year since then, it'll give you how many paid contributions you have, how many credited contributions, and then it'll give you a column out to the right to give you what's your final result for each year. In fact, there are 2 columns, not to overcomplicate it, but it's paid and credited. What you want to see in the final 2 columns over to the right in this record is a number that's as close to 52 as possible when you add the 2 together for each year. If you look at it and there's a load of blanks, that's when you start to go, right, there could be trouble here. But if you've worked abroad in most of the countries we've heard of, most of what I'm talking about, so racist, most of the countries we would, the larger countries that we have a lot of trading relationships with, we've got reciprocal arrangements. So if you work in the UK or the US or Canada or Australia or anywhere in the EU and you've paid national insurance there, you'll get a credit for that when you go for your contributory state pension here. Just keep track of your foreign tax number. It'll make it easier for them to pin the whole thing together. If you find that you've got a lot of gaps but you haven't worked abroad, what you really want to do is you want to make sure there are no gaps from this point to the age of 66. If you have a lean year, you can possibly make a voluntary contribution. You just apply to the voluntary contribution section of Department of Social Protection. There's hoops to hit. You have to, again, have at least 10 years of paid contributions. And it's not 10 full years, it's just 520 paid contributions over whatever number of years. But it's always worth checking out. If you're going to go traveling for a couple of years and you've got lots of PSI contributions in the bank already, you can make a voluntary contribution to plug the gap while you're away. Different things like that. I talked about keeping an eye on the risk from a materiality point of view. Don't get too concerned if it's small amounts. If it is a large amount, go and you don't know what to do with it, go and talk to an accountant and just regularize it before revenue come asking you about it. The second thing is don't let that problem build up over a number of years. Third thing, pension and social welfare contributions, all that stuff. VAT registration is another key area. For any of us lucky enough to start doing, usually what I see it is people start doing really well in voiceovers. They start to earn more than 37,500 in a 12-month period. At that point, you should register for VAT. And then that means your voiceover agent charges VAT on top of you, on top of your fee, and you hand it over to revenue. I've just seen it a couple of times, maybe 3 or 4 times in the last 20 years, where somebody is not aware of that, and all of a sudden they get a tap on the shoulder from revenue to kind of go, we can see you're earning a lot of money, it's in your tax return, so what's your VAT registration status? So just keep an eye on it. It's not going to be a big record for a lot of people, or a big problem for a lot of people, but just keep an eye on it. People often ask me, how long am I supposed to keep records? You're supposed to keep them for 6 years. So we're now in 2022, so you keep them for the 6 years before this year. So 21, 20, 19, 18, 17, 16. Revenue can go back 6 years, you can go back 4 years. If you feel you're owed tax back, you can go back 4 years. And again, we're in 22, so you can go back 21, 20, 19, 18. Revenue's website, My Account, is your friend. It's really useful. One of the things I see a lot is people coming to me and saying, I'm being hammered for tax on this PAYE job. My Account will fix all of that for you. What's happening there is that all your credits are sitting with a different employer, so there's the facility to go in and cease anyone you're not working for. In fact, if anybody is watching this now and knows that this is an issue, or wonder if is this an issue, go onto your My Account login and see what active employments are there. And if there are any there that you're no longer doing any work for, just go in. You have to press the button to add a job to then go in and cease the job. Anything else? Anything else?
That's fab for the moment. I have some questions about what you said, but I think that just to add into the mix of all of I suppose the labyrinth, which I'm a lot calmer about now, thank you, Peter. The labyrinth that is money or not, earning it and so on. We'll be adding more from Gerry O'Brien, who is not only an actor, but president of Irish Equity.
Hi, thanks, Pauline. Now for the lived experience, Peter. That's the legislation and the lived experience getting through it. I began my career, and actually last year and this year are kind of a 50th anniversary of me actually drawing down my first paycheck ever as a professional actor. I began in the Gate Theatre, and the contract went from, I think, 1971 into 72. So this is a 50th anniversary for me. My lived Thank you. I made it. My lived experience is, Peter has gone through from the technical side, and it's very important. I'm not sort of going to undermine that or deride it, because I've had to deal with accountants, and I've dealt with them, and I've dealt with the tax, and I've dealt with social welfare. And it is extraordinarily worrying and harrowing for a professional actor, because we don't know who or what we are. We're kind of atypical workers. And there's a huge debate now because of the gig economies and everything else. Where do we fit into the very rigid legislation at times? We don't know. And, Peter's expertise is great for getting us through there. And we do fit in. We do qualify for a lot of the things, but we aren't aware of it ourselves. Now, my own personal experience with money is I come from the understanding of money. I have it or I don't have it. I can pay the bill or I can't pay the bill. And I think every actor actually goes through that. But we have to, when talking about how, money, which, is kind of abstract to us, and Peter touched on something that was very important to me when he said, I didn't become an actor to become extraordinarily wealthy. Somewhere in the back of our minds, there's a bit of truth in that, but there's also the idea that if we're artists, we don't have a value. And there is actually legislation that helps actors to have a value within society. So I have to know that the work that I do has a value, and it has an ongoing value. So as well as sort of paying all the PRSI and PAYE, and this is a great myth that people have when I talk, even to this day, outside of the industry. People say, oh yeah, well you guys are tax-free, you don't pay any tax, because of that famous tax break that happened many years ago. Oh, what are you complaining about? You don't pay tax. Actors pay tax in a punitive measure, because as Peter pointed out, for 3 weeks we might have a job, and we're delighted we have a job, and we're getting money, and then suddenly, because of whatever space of the year it falls into, we haven't organized our credits, we haven't done that administration, and suddenly we're being taxed at 40% on PAYE or something like that. And then you deduct the agent's fee from that. So the fee you're getting is suddenly from 1,000, it's down to about 300 quid. So our brain isn't sort of measured enough to be able to cope with that at any particular time. So it becomes a worry to us, and then we feel, how do I get out of this? Now you do, I've actually learned a bit at this stage. I've just finished a job, all the tax was taken on PAYE at source, but I know that when I do my accounts this month or next month, that will be balanced out, and I will either get a rebate or I'll owe a little bit more. That's the simple fact of it. But at the time, for a young actor starting out, that is a huge concern, and it's not being taught how to navigate the financial world when you set out, because we're filled with the love of our art and our passion and what we want to do. And then we begin to stumble. And then we realize we can't afford the rent. And then we realize that this is a really tough way of making a living. But as I was going to go back to the idea that we do have a value, and there's legislation that gives us a value. On top of the pensions that we would be entitled to, I would also suggest that we should start in the union, and I'm going to start this debate at this AGM, examining how we set up a pension fund for migrant workers within the industry. Because I'm going to work for Ardmore, I'm going to work for OTE, I'm going to work for Druid, I'm going to work for there. But none of those companies contribute anything to a pension fund, or nor are they tied up to being an employer's pension. There's no obligation on it in this country. There was a green paper, I think, on an auto-enrollment for pensions, which would have meant that you could contribute 4% of your fee, and whoever was employing you would contribute a percentage as well. It was very interesting. I read that the employee would contribute 4% and the employer would contribute 2%. So I think in Australia there's a better deal where it's 4 and 4, and the employers have to physically and legislatively opt out of that. It's automatic. So something like that would mean that on top of whatever state pension you're going to get, you would have a pension. I took out a pension when I was doing really well at one stage, or relatively well. It was a less shit year, shall we say, than the normal shit years. And I kept it up for as long as I could. But eventually it was too much and I had to cash it in. But I still have a residual payment out of that pension on top of my contributory pension, because I went through all of the things that you went through. That you mentioned about going through, and I had to go back to RTE, and I had, you know, years and years of stamps that were stopped on various radio plays and television plays. And through the 80s and the 90s, I had, you know, a consistent body of work, because I was working in loads of TV series, I was working in loads of radio series. I did a daily serial for nearly 11 years, all of which contributed and had deductions and contributions towards my contributory pension and my entitlements there. But I have another extra couple of £100 a month now as a residual of the pension fund that I had to cash in. Had I not cashed it in, it would have been quite substantially more. So one of the debates I want to have at this AGM is to pass a motion to ensure that we now start to lobby to create within our industry a pension fund for performers, however we manage it, or whether it's a hybrid that you pay something every month yourself, and then when you're working, there's a contribution from the employer and your fee. Because we need something. We're in a precarious employment, and we have to plan ahead. We have to plan ahead for everything. I know the whole performance thing is we live in the moment, and that's great until the moment is suddenly when you're 67 and you go, wow, this is some moment. So I think, as well as teaching and encouraging that great passion, and that great, encouraging the talent that is there, we have to train and teach our performers how to actually survive. The idea of artists starving in a garret is something that is sort of Victorian and has to be ripped out of our minds and of the minds of the people who interact with us. One of the things about valuing things is my favorite, and this is where I know a lot of people are going to go, oh, here he goes again, is the idea of, in our contracts, having built in the whole residual payment issue. And it's a problem here in Ireland. It's a very serious problem. Because I was just explaining to Pauline that I did a job nearly in 2006 in the US, and immediately people say, oh, yeah, they've loads of money over in the US. It's got nothing to do with the money that you have at the point of production. It's got everything to do with the value of the exploitation of that work, on and on and on and on and on and on. And I still get into this country, and I put my returns down as US dollar income. I still get about $2,500 to $3,000 a year from that one job. And that's gone on since 2006. And that has to be, I'll illustrate it this way. I was working in the UK in a studio doing a recording session, and there was somebody else in the other studio, quite a well-known actor who was recording another audiobook. And we came out at lunchtime, we were having a sandwich and talking and rapping about this and that. And I explained the situation in Ireland, and they were horrified that we signed buyout contracts, or contracts that are so complex that they will never deliver anything at the end. And they said, you know, they can't do that. That's our pension. And it is. I watched an awards ceremony, one of the SAG awards ceremonies, and one of the hosts came up and held up a check, and this is going to be the interesting bit, held up a check, and she said, this is the SAG check that I got for my dad's work. Because although he is dead, the check has to go to his estate, and it comes to me. Now, in the UK, it's the same with residuals. Those residuals are part of your estate because it's revenue from your intellectual property. And you, if I got a film now and it had a good back-end deal, that will go on for 50-odd years. Now, I'm the wrong end to see 50-odd years, but in my will, I can leave the benefit of that to my family. And that's something that we have to consider as well. The way we're contracted and the legislation that protects our rights and puts a value on us as performers and stakeholders within an industry, that has to be harmonized across all the English-speaking industry, because our work is exploited in the same territory that work is exploited in America. So why are we getting less or nothing at all when that's happening? So there's some of the things that I'm trying to open up the debate on, and it is very difficult because people don't like legislation when it means they have to pay something for it. We don't like tax legislation because we have to pay something for it. If there's legislation that protects an individual, the people who are gaining benefit from that individual will look for ways to go. That's the nature of it. That's the nature of it. So you have to have a balanced negotiation about the value that you have, and that includes the economic value that you have that is vested in you intrinsically by legislation, and how that's exploited. So there's some of the issues that have to be dealt with in this country, and dealt with very quickly, because the industry is a subsidized industry. And the state should be ensuring, and it's actually within the various legislations, that state investment has to ensure jobs of high value. And that includes making sure that all the neighboring legislation is applied into that job. So that's something that we have to do, and we have to work really hard at it. And it is going to be a battle, because there are vested interests that don't want that to happen.
It seems to me, Gerry, which I'm happy to hear, that equity, and you are president, are beginning to strengthen again, because there was a doldrums, let's say, for many decades, and where a lot of people felt that it wasn't even worth being a member. And what I like is that you have brought up how money and the arts and being valued, it can make one, you can get quite political when you get interested in it. So I would urge everyone to have a look at the equity site as well, and if you're not already a member, consider being part of what is now becoming a really strong and vocal union. Can I ask one quick question, Gerry, before I get back to Peter about something that he brought up, which is this. I know that I asked you earlier, and I'm sure it has been a busy thing for you, seeing as we've just lived through a pandemic, but does Equity have a benevolent fund, and were you able to help people and still help people if they are on their uppers?
Yes, we do have a benevolent fund, and unfortunately at the moment, there's a very fixed amount of money in it, but it is there to help people in times of crisis. Now, it's run absolutely anonymously, in that somebody who is in a particularly bad position can apply for it, and the union, there are 2 trustees. I never even know who's applied for it. So the executive never know. There's no backwards going, oh, that person applied for it. There's none of that, because I won't know. And that decision is made away from the executive by 2 people who are bound to confidentiality. They can't even tell me as president who they helped. And one of the things that I want to do over the coming years, because I know UK Equity have quite a large benevolent fund, and over there you have very high profile performers who will donate, this wonderful word, their residuals from some of their movies to actually bolster the benevolent fund. And they will have wonderful events and opening nights that are purely for the benevolent fund. So lots of money go into it. We have a very small community here. And one of the things I want to say to is we have to be a community, and we have to talk to each other, and we have to help each other. But when we pay out, we don't have any mechanism to replenish. So it's a limited fund now. So contributions can be presented. I've contributed various fees from occasions like this back into the benevolent fund. So I think when people become aware of it, and if you are in a position, or I want to try, and there is a possibility of a very big event this year, but I don't want to say anything because I want to try and make it happen. And that's going to take a bit of organization that will highlight the benefit fund. But we have a lot of our members, and if you realize from the Arts Council, some of our incomes are as low as 9,000 a year as earned income for actors. That's way below the poverty line. People have got to realize that, this is an industry that in the audiovisual sector, you see very glossy magazines from and pamphlets from various huge organizations and accountancy firms who say the value of the industry is 1.7 billion to the economy. Now, if it's worth that much to the economy, surely they can contribute when we're working to a pension fund to ensure that the talent and the indigenous talent is looked after. And those are the sort of things that we have to fight. But yes, we do have a benevolent fund. We have to replenish it. So all contributions are gratefully accepted. And it is run on very strict lines. I mean, it is as strict as that, where it's a financial pool. There is no sort of backhands and pockets or anything like that. It has to be all above board. SIP2 have to keep it above board because they're part of the partners who look after it. So yeah, that's the answer to that question.
Wonderful, yeah. And again, it's wonderful to see that there is, a benevolent fund with the union, and that the union is fighting for, to make that an even greater help to those who need it. It sort of brings me to something, Peter, we were earlier saying, just before we started the forum, to one another, I said, minding your money presupposes that there's any money to mind, which was my main problem with the, the title, although it's just an umbrella for us to tease out some things. When you spoke earlier about benefits and credits and so on, and I began to get great hope that you also said that, you can have an amazing year and then a shit year and a shitter year, but then there'll be another amazing year. So an amazing year is coming for all of us, is what I will leave with. But also I wondered if you could talk us through signing on and getting benefits that way. Because, I mean, just to tell you why I wonder about it, I haven't signed on since the 80s. And believe me, it's not because I could afford not to. It's because they made it so difficult for you to, to earn anything at all. Like, if you would go into them and say, I'm signing on today, but I did do 1 day's work last week, and they would not take into account that it was for very little, or that it might take 3 months to get paid for it. It just seemed that everything was stacked against you being able to sign on. But I now hear that I should probably have kept with it for the unemployed times, because you build up credits, and that they could go towards your PRSI. Sorry, that's me. That's actually me saying it's time to get up. It normally would be, by the way, in these unemployed times. Why be up? It's warmer in bed than having the heaters on. Expensive. Anyway, but like that, if you are signing on, you are actually building up some credits, and they would stand you in the end of all, say perhaps if you live as long as it's going to be whatever age to get your contributory pension. So what's the best practice there, or how can it be did?
A very good question. So there's been a few improvements to the social welfare system in the last 3 or 4 years, and one of the key ones is that as a self-employed person, there used to be no entitlement to job seekers benefit. So you used to have to be, some people are nodding, you used to have to be a PAYE worker, and what would happen is that your PAYE job would finish, you'd go into social welfare, you say, my PAYE job is gone, and they would go, hold on a second, they would pull up your record and they would check your PRSI contributions from the year before last. So always 2 years before. Reason for that is that we're always 1 year behind for tax returns and stuff like that. So if you went in 2022, they'd look to 2020. At the end of 2019, they brought in job seekers benefit for self-employed people, which is amazing, because it means that what used to happen before is that you're self-employed in any business, an actor, a plumber, accountant, whatever, and then your business dries up and you go in and they go, no, you've earned no rights to job seekers benefit. You might be means tested and get job seekers allowance, but not benefit. So they brought that in, and again, as long as you had contributions in the year before last, you would be eligible for 6 or 9 months of job seekers benefit as a self-employed person. So that's been a big improvement, and I know I'm not answering your question, but that's a kind of an important part of this whole. And I wanted to tack on to that, to as a self-employed person, doing a self-employed tax return, which is known as a Form 11, which is not the simple one I mentioned through my account. You do it through Ross or you do it on a paper return. As long as you have at least 5 grand of income in there, another magic 5 grand, you will have a minimum PRSI payment of €500. Now, it mightn't always show up as that because you might have a blend of PAYE and some tax paid and then a PRSI bill, and between the two it might come in as a lower amount. But in behind the detail, you can always see there's a minimum PRSI contribution. If you have at least that minimum PRSI contribution of €500 or anything above that, that will automatically give you 52 Class S contributions for that tax year. And once you have 52 Class S contributions, A, you're eligible for job seekers benefit as a self-employed person 2 years later, but also you've 52, the maximum for your contributory state pension. So someone with €5,001 as a self-employed person in a particular tax year has the same value as a PAYE worker on $1 million. They both have 52 PRSI contributions. One is not more valuable than the other. So that's a kind of an addendum to that question. But what Pauline is saying is that there are periods in our life when we're not working, either as a self-employed person or as a PAYE worker, and you might go into social welfare and say, I need some help, and they might kind of go, okay, let's first of all look to see if you're eligible for benefits. They look to the year before last, and there are variations on that, of course, as well, but that's the general rule. And if you come up light there and you're not eligible, or you get some benefits, but they run out after 6 months or 9 months. Then they means test you and they check to see, are you eligible for job seekers allowance or one of the other benefits? What they might then do is look at your household income. Your partner or your spouse doesn't necessarily, revenue makes you be married before you get the benefits of being married. Social welfare doesn't. You could be living with someone and they'll go, no, their income is your income. So they'll means test the house, and they'll also look at things like who else in the house is on social welfare. And based on all of that, you mightn't be eligible for anything. And they might tell you that, but they might also say, oh, by the way, you can still sign on. You go, well, what's the point in signing on? When you sign on, even if you're not getting a payment, you're getting a credited contribution week for that. I think it shows up as a J contribution. I mentioned S for self-employed. A are the ones you get for PAYE, and then there's a load of ones in between. If you work for a family member, I think it might be M. But J, I think, is a social welfare contribution you get as a credited contribution. And you're allowed to use a certain amount of those in your contributory state pension calculation. Again, the detail behind it, I'm not 100% sure. But yeah, you're allowed to use some of those, and a good whack of those, along with your paid contribution, just to make sure your numbers are as high, your average is as high as possible.
So does that make it then a best policy
Definitely.
If you're unemployed to make sure that you are somehow signing on? On the back of that, can I also ask, because I may be doing it this week myself, does it mean though, is it like the old days? Do you go online now is the modern way, or do you have to show up in person? Because there was a thing for actors, you know, if you'd done really well, and I know people who then didn't sign on specifically because they would have to go to an unemployment exchange and queue and be seen, and there was a pride there, you know, that they didn't want to be seen to be asking for something that they were perfectly entitled to. So how is it done these days?
Another very good question, and I don't know for sure the answer. I know that the My Welfare platform was very, you could do anything on it, particularly because of COVID, particularly you go for the PUP and stuff like that. I think, and some people here might even know better, but I think you can do job seekers benefit.
Doing a meeting with the inspector, and I went for a seminar. It's a bit confused, like you go in person, but I can say that basically there's nobody there, so nobody see you, because like they kind of like having small kind of like very well spread out because of COVID, so like I could see like in fact I know that there's two people, and it's definitely different than before. It's everybody is signing on basically, like it's very different kind of, it's the environment is much different. They're very nice, they're very kind, there's the ones who recommends, but you still have to go in person. That is very confusing. Like actors to sign on in person, and when I arrived there, they were like, why are you signing on? It's okay, you don't have to sign on. But then like, they called me for a meeting yesterday, and yes, I was self-employed, and I confirmed you can get your job seeker, like your job seeker allowance, at least this is my case, not everything, which is a bit different. They need just a lot, like if you meet with somebody else, they want to know exactly who is somebody else is and how much they earn, and so it could be like, they look a lot into your bank statement, so it's still a bit like somehow humiliating because you have to talk about your life and that stuff.
terrifying.
But overall experience, it sounds very well. I think there's a lot of people now doing it because of COVID and because of...
It's destigmatized, yeah.
Is it also the case that I kind of throw this open to the floor because I don't know. Back in the day, if you didn't make yourself available for every single job that was going in the country, on the being valued issue that we were talking about, you know, rather than saying, well, I am available for work, but I'm available for work in my chosen field, which is as a creative, or by the way, we're merely interpretive actors, that's why we don't get the tax break, or the tax-free status. But you know, there would also be the thing of, are you available for any job that's going? And if you said, no, I'm available for jobs in my field, then they would say, well, now you're not available for work. Is that similar now?
I know that there's a new thing that came around 3 or 4 years ago, which is job seekers allowance for artists, and that includes actors and different artistic people. So basically, first of all, it's job seekers allowance, so it's the means tested one, and you need to be on it first to be able to navigate or to migrate from that to job seekers allowance as an artist. And what that does is that they look at your previous year, and I think your artistic income has to be above 50%, and there's a few other things that have things. But what they do, and you get it for a year, I think, or possibly 2 years, and basically what they do is they don't activate you. They don't make you go for jobs that are not in your area, and they don't make you go for training that's not in your area. And it can be just a little bit of breathing space during that period. But as far as I know, they still look for you to go at...
Yeah, I knew about that, and again, unfortunately, I mean, that's what it says there, but some of the reports we got from members is that the lived experience is quite different. It's trying to convince people who don't know what the lived experience of being an actor is, because they're in their job, which is bound by their rules, that they put you through this humiliating process of you trying to convince somebody that this is what I'm doing, this is what I believe in, this is what my passion is. Again, it comes down to passion. I just want to touch on one other thing that's going to be rolled out very shortly, is this basic income for artists. God, I pronounced that very odd. But this is going to be an interesting experiment. And we were one of the stakeholding bodies who consulted with the department on this. There's about 2,000 places across the spectrum of cultural workers. So that's going to be actors, visual artists, writers, directors, stage management, all of the people who work in the cultural sector, who are going to be given for a 3-year period a fixed amount, and they can go and earn above that. They can carry on with their job. They're not going to be going into social welfare offices. They will have a basic income. Now, it was very interesting part of the questionnaire, because it goes to some of the area of how do we define ourselves within these systems, because it had a question that said, well, this is to prove that you're a self-employed person and you're going to make this money. And then again, I had to take the person, yeah, but you have to tell revenue that we are self-employed, because they won't allow us to be self-employed. And so one civil servant went, what? And then they said, oh, and to prove that you're entrepreneurial. I said, but a lot of us are not entrepreneurs. A lot of us are actually actors who go to theatre companies to work. We do not create the opportunity of the work, but we're still actors. So every definition began to be dismantled by the legislation itself. So everything came into conflict with everything. Now we resolved it, and there's going to be, I mean, and it's good, those debates are very good and positive. Don't get me that I'm undermining them. But it does allow us to ask the questions of where we fit in society and what we do. So it begins to put a structure on the atypical work nature of being a performer or an artist or a writer. So these are all positive steps. Don't get me wrong that, I'm knocking them, because everything that helps you to give you a basic income and a chance to survive in this society is a very positive thing. And we must support it as best we can. Now, it's not going to satisfy everybody, and there will be questions, and people will have objections, and they say, I didn't get it, and I didn't get it. This is a trial, it's a pilot scheme. And we have asked all the questions that we can ask. So it is one of the most important things, by the way, and is that one of the recognized bodies that proves that you are a professional in what you do is equity. And for musicians, it's the MUI, and being a member of either of those bodies is one of the boxes that's ticked for you to qualify to get into the lottery to be one of those 2,000 recipients. Now, we hope it works over the 3 years and it will be expanded or improved upon or become something that's a regular thing within our society for people trying to contribute culturally to the experience of being alive. And that's that the state is going to invest in that way. And I think that's really important. So we will be supporting it. If you're interested in applying for it, be aware that being a member of Equity is one of the criteria that will help you move along that path. So just to let you know about that.
And Gerry, just to check at the moment, what is the subscription to Equity in 2022?
It's an extraordinary amount of money. I think it works out just over €100 a year. If you do a direct debit, it's about €8, some £8.90 or £9 or something, or euro a month on a direct debit. It's as little as that. But, you know, as you said, Pauline, there was a period of doldrums there. There's an executive here now, and we are trying our best to make everything work for the members. But as I would be saying constantly, I personally am not going to change a thing. I won't. But every single one of you together with one single aim will. And, you know, there are various organizations that, you know, that are out there because of the disgruntled nature. And what they're doing is they're dividing that one aim and that one target. So Equity is a democratic organization. It's made mistakes. It will learn from mistakes. It will make mistakes again. But it belongs to the members. It belongs to the actors. And we've taken it back.
Marvellous.
So that's what I want to say.
Delighted to hear it, because it really does. It's always great, isn't it, to feel, as you said, that you're part of a community, but that somebody's got your back, you know, and that's it seems like a good investment to me. I'm going to open the floor briefly to questions. I do have one thing, sorry, Pauline, to say beforehand. We got asked, just for the purposes of when this goes out online, to keep the questions really short so that we can cut around the answers. But Pauline, yes, you have a question.
I just have to say thank you for starting. So much information and consequently so many questions. So I just find myself to two and hope what are people on the floor asking us. First of all, I originally went over to the UK to train and then subsequently worked there for 16, 17 years. So I have a work history there, and last year I began to be asked for things for my pension. And I received it in September of last year and was really shocked because when the stuff came back from the UK, I had stuff where like organisations participated in a London Education Authority for which I worked for some time on and off as when I was out of work teaching adult education stuff. And they that had been disbanded and there was no record of all of that. I worked for the BBC when I was first in London, and that would have been before I had my children, which was what, 73, 74, and they couldn't find a record of that, so I lost all of that. Also, when I was in the UK, my son was ill at some stage. I would sign on assiduously, and at one stage when he was ill, I was late for signing on, and they asked me why, and I told them, and they said, oh, well, if he's ill, you're not available for work. So I had 2 years cut out, and I assumed because that would all be made up somehow. It wasn't. When I came home, and 30 years ago, and asked for my record there, they said, oh, there's big gaps. But I remember going to Store Street assiduously and sitting down with the guy at the end of the year, down in Busaras, and handing him money to make up whatever had been paid. I never asked for a receipt or anything like that. And they said, oh, there's no record of this. I'm just wondering how I address that now. Well, I mean, I'm on the minimum. The widow's mite.
So the question there is kind of, if there are gaps in your PSI record, what the hell do you do about it? They've got an appeal process, and I've been through it once with a client where we went back and they looked for documentation, anything that we could find, like pay slips and stuff like that. I'll project. This one? Yeah, good. There was a period from the late 90s or possibly even earlier where something had disappeared, and they looked, and there was 2 different companies involved, and they looked for backup, and when we found like the most scant backup for one of them, they accepted it, and they wouldn't take anything for the one where it was just our words. So the answer to the question is, I don't know. There is an appeals process, but they look for documentation and backup. Yeah, that's a very tricky one. Yeah.
Peter, can I ask?
Certainly.
Just in terms of PRSI contributions, I understand that you can actually pay for lean times. Is there like something like 4 years or 6 years you can backdate it? So for now, if I wanted to bump up my pension, I could contribute a cash amount. Do you know what?
Yeah, I do actually. Yeah. So this is the voluntary contribution. The question there is like, if you do have gaps in your record, like what's the system? How far can you go back and so forth? So it was very, very tight. Up till about 3 years ago, it was 1 year. So you had to get your stuff together within a year and make a contribution. But they've made that much more flexible. It's now 5 years. And again, just Google voluntary contribution and you'll find the thing. And like the people in the Department of Social Protection who are involved in all this, they are on your side. They want to do their best to plug gaps and to find contributions. That's been my lived experience with that. So you can go back 5 years. And again, as usual, I think it's like 5 years at the end of this year, or sorry, from the end of the previous tax year. So again, going back to 2017 or so. So 2016. So yeah, you can go back 5 years. And again, even if there's a gap a year or two before that, I would ask them about it because I think they're more flexible than on paper.
Just have to say it's wonderful to see an accountant that has a tiny problem with subtraction there. When you had to work out the numbers. Does anyone else have a question? Oh, yeah, of course, Peter.
I've worked in England and I've worked in Ireland all my career. But I was a member, I have been a member of Equity from the very beginning. It was very hard to get into Irish Equity, but I became a member of British Equity, and I have been throughout my career. I was also a member of American Equity while I was on Broadway, and they were absolutely brilliant. They took 2.5% at source of your Broadway income, which was quite a large amount of money. But you got healthcare and you got a contribution to a pension. You got all sorts of rights. And when the representative came into the rehearsal room on Broadway, she kicked the director and the producers out and said, "Okay, guys, listen up. Here we go." And here was this is about us. Now, British Equity is not quite as aggressive, but I can tell you that there are all sorts of benefits that you don't have, that you're not even aware of. For example, I got cancer 4 years ago, and there were 13 charities associated with Equity, and I got help from 3 of them, and the total amount of money was in excess of £6,500 to pay for rent, to support my son in college, groceries. You know, and that's one thing. I also, if you die while you're still working, all your funeral expenses are covered. They have a hospice that is run exclusively for elderly actors. It's all sorts of things. But that's because it's a resource and because everybody supports it. And that's what's missing amongst. In Ireland, we need to rebuild the community, but we also need to understand we have to pay, and we cannot actually achieve anything without people like Gerry, we're all sort of singing from the same hymn sheets, but we need to get together because nothing's going to change. But British Equity is a real example of how it works. I mean, they really fight on behalf. And also, you can form up if you've got a legal problem, a tax problem, a health problem, a wellness problem. It's all there, but it's paid for by people's subscriptions. And I have to say that I just think that British Equity is a brilliant organisation, and we're hoping to have another forum with Gerry and with a representative from London to talk about that in more detail and about what the benefits are and how we might actually sort of encourage more Irish theatre workers, especially into an Irish union, and make it strong and go out and fight there for the things that we deserve. So,
yes. And an amazing endorsement of being part of a union, and of course with membership comes strength and so on. I was actually going to wrap things up, unless Gerry, do you have something to say?
Well, first of all, I want to endorse everything that Peter said, but I also want to address it. We fall into that awful situation of economy of scale. because our biggest neighbour and the biggest aspiration for a lot of actors is always to look outside of our own country. So membership here falls off, but I know all of my colleagues, and a lot of my colleagues will be members of British Equity because they live and they work over there mainly, or a lot of the time, as you have, Peter, and you've been joined. I know I benefited from Screen Actors Guild contracts because I've worked in Los Angeles. I'm in a situation now that if I get another job in the United States, I have to join Screen Actors Guild, and the administration fee is something like $3,800. That's just to get your papers processed, and then after that, it's means tested on the things that you get. But again, they have a huge membership, they have huge resources, so they create huge pension pots. I spoke to a colleague I hadn't seen for nearly, since the 1970s when I was over there last year, and he's now retired, but he's been able to retire quite comfortably on his SAG pension, where money was taken from his fee and taken from the producer's payment, and it went into a SAG pension. We have less than 1,000 members at the moment. According to the department, or the Central Statistics Office, there are about 5,000 people claiming to be performers or actors in this country. So we have 1/5 of the membership. That means that we don't have the strength to go in and say, unless something is done, then we will go through the whole process and we will say we're in dispute and we want to change this to our benefit. Things are ratified. My great word was heard recently, it was by consensus. Well, if everybody's signing it, what do we need you? I actually had somebody say to me, well, Gerry, there's more non-union actors out there than there are members of the union, so why are we talking to you? So, that's what we're up against. The other thing is that you point out all those benefits to the well-resourced unions. So I come onto the thing saying, well, we're members of Equity, why don't you have those? And I would love to have all of those things. Everybody on the executive would love to have all of those things. But we don't have that sort of underlying resource. I think we have a problem, and we've always said we've had a problem in the bureaucracies that are saying they are for our good. And I think we have to start saying, no, we know what's for our good, and this is the way it's going to work. But we can only do that with a lot of support. Now, having said that, there's two things I want to take an opportunity to remind people about. One is the AGM is coming up on Palm Sunday, and it'll be a hybrid meeting. So you have to have your membership. So please make sure your membership is up to date so that you don't have difficulties either getting onto the Zoom meeting or getting in person if you want to turn up at Liberty Hall. That's a decision that's hanging around there. The other thing is that we are also on March 8th going to have another meeting, which is going to be very important, which will be for members only. And there will be an announcement I can't say too much, but it's March 8th. It'll be a Tuesday afternoon. I know some actors will be working. I know it'll be difficult, but it will be a very important meeting. And that's going to be announced either today or Monday. So people watching this who are interested, please make sure your membership is up to date. If you want to affect change and are thinking about joining Equity, do it today, because it takes time to get your membership processed so that you're on the system and you can vote at the AGM and you can make contributions to the AGM. You can do all of those things when your membership has been processed. So start doing that now, and remember those two dates, March the 8th and Palm Sunday, and join now, because it's you, the actors, who will make the change in your workplace, not me. I'll just say what you want me to say. That's the way it works. It's a democratic organization. So, we've got to get the same. We have to be equal to every other actor who works in this country who is subsidized by the state. That's the end of it. Every actor who works in this country, the cast, all the cast, are beneficiaries of the 32% of payments made by the government to the film industry. They're part of the eligible spend. It's in the legislation. I don't see why we should be treated differently to any US actor or UK actor working here.
We'll wrap it up there, because as we can see, there's a whole other world of issues that any of these forums opens up. But what I find really brilliant about them all is that they really are all to do with wellness, aren't they? And keeping well as a creative person in a crazy and not to be swapped for anything else industry. And I always come away less frightened of the many obstacles that are out there, and also with a bit of a spring in my step, thinking, as Peter says, an amazing year is coming down the line somewhere. And today was no different. And it was just wonderful to be talked through all of the brilliant initiatives that are out there and the things that we can access to keep ourselves going in lean times and in good. That's largely down to the wonderful Fight2Flight theatre company and Smock Alley, who have been just so instrumental in the talks happening, but also to any of the members of the panels who come along. And today we couldn't have done better than Gerry O'Brien, actor and president of Equity, Irish Equity, and Peter Daly, actor and accountant extraordinaire, a man with a long, long birthday and Christmas card list, as in he gets lots. Because look, we've had a great session with both today, and I'd like to thank them hugely, so do join me.